All right. These are some of the things we want to cover today. We want to talk about how investors are using their retirement account, how they're paying their kids and their grandkids, how what they're doing with health savings accounts, partnering inside retirement accounts, Roth conversions. I want to talk about loans, preferred shares, owner shares, how to invest actively and legally inside the account. Mention SEPs, mention solo 401ks. What I found is that investors have not kept up with Secure Act 1.0, Secure Act 2.0, and that there's just so many cool things that the wealthiest Americans are doing. When we look at over the last 25 years, the retirement accounts of our 10th, 20th, 50th, 75th, up to our 90th percentile, we've really seen a very flat kind of growth rate. In fact, let me do this and make sure I can write on the screen here. This is how, you know, let me get a better color here. There we go. And so that's what we're seeing with, we're seeing this for the top 90, and then we're seeing this for the top 10 percentile in retirement accounts. And the two things that we've seen is we had the Secure Act 1.0, which Mandy is joining us. She works for IRA Club. Mandy, approximately when did Secure Act 1.0 pass? Was that like 2017, 2018, 2016-ish?
Yeah.
And then Secure Act 2.0 came out mid Biden term, right?
Yep.
So it was like
Yep.
22.
Yeah.
And give me a laughing face emoji if you haven't heard of either of those things. If you haven't heard of Secure Act 1.0, Secure Act 2.0, you're kind of like, what are those? Good. I'm glad you're here tonight because my goal with all of these topics is to K through 12 them for you. Guys, I started 25 years ago as a high school teacher interested in investing in real estate. I was not fluent in legal, tax, financial. And so I've watched my clients and I've watched as I've learned, I've realized that there's this gap that as a high school teacher I can fill for you. So I do have Mandy, who is an expert on these things, who's joining us tonight, and Becca, who works with my team. Because, like I mentioned earlier, if you want one-on-one, if you would like, we also have two really cool gifts for you tonight. We're going to give you access to our community so that you can meet with us every Monday. We do a real estate Q&A session every Monday that's recorded on Zoom. We're going to get you access to that. Becca's going to get that to you guys. And then we also have two free self-directed IRAs for you. Okay, give me a heart emoji if just for showing up, you're excited that you get two free self-directed IRAs just for being here tonight. Cool. We're going to show you how to get all that. We are not selling a package tonight, guys. There's not a $19.99 package. There's not a $99. This is pure content. We're excited to meet you. Now, give me a party emoji if you've heard me speak before, or if you've heard Mandy or Becca speak before. If you've heard us before, give me a party emoji. Okay. And then if this is our first time meeting you, give me a thumbs up emoji. If you've never heard or met any of us. Okay, cool. Lot of new people.
That's
Okay?
awesome. That's great.
Great. And so yeah, for the new folks, guys, there's no sell. This isn't an MLM. There's no I don't have a credit card machine here. We're not trying to put you in a mentorship. Okay. Full disclosure, like Don mentioned, I'm a real estate guy and I have property management companies, construction companies. Two ways that I interface with investors. Every Monday I do a Q&A with about 400 folks. You can jump on this Zoom and answer questions about anything. People will email me questions on Sunday night, Monday morning. Aaron, can you run the numbers on this deal? Aaron, can you help us figure out how to do a partnership on this project? And so that's how I interact directly with my clients every Monday right here in this studio. And so we have the dry erase board to answer questions because I started as a high school teacher. And then once a month, I open the doors of my offices here in Idaho or in Indianapolis, and we do a free 3-day real estate training. We have a ton of Protect Wealth folks that come to that training. IRA Club is there. Anderson Business Advisor attorneys are there. And we basically show people all the deals that we are doing and let them have access to that. And that's where this knowledge that I want to share with you tonight has come from and started, because We meet with
Can't
investors
be
who are
in
looking.
here. I'm dead serious. This is
What? Oh, make sure you mute yourself. We meet with investors who are. How many of you? Give me a thumbs up emoji if you're kind of focused on passive investing. If passive is where you're at with your money and with this phase of your life, give me a thumbs up emoji. And then give me a heart emoji if you're kind of more focused on active investing. Who are my active investors? Good. And then if you're crazy enough to be doing both, give me a laughing face emoji. If you're doing some active and some passing, okay, great. And so that's where we meet with people at our live events. We hear people on our Monday calls, and they say, Aaron, this is what I want to do. What do you think? Now, I want to break down for you kind of, let's see if I can make my drawing line a little thicker here. I want to break down for you just an example of my wife, her account as context to opening the discussion of this. So my wife has a SEP, okay, and SEP stands for Simplified Employee Pension. She started that 9 years ago. And Mandy, approximately, how does the contribution work for a SEP?
For a SEP IRA, it's basically 25% of the income of your business. So you have to be self-employed with no full-time employees, no W-2 employees, and then it's 25% of your income that you make or your that can go into your SEP up to 70,000.
Okay. And so for the last 9 years, my wife's been contributing about 60,000 a year because Secure Act 2.0 just raised the limit, right? Up to 72,000 you said, Mandy?
Mm-hmm.
And so her contributions
70. It was 69 and now 70.
Okay. And so essentially she's contributed about 600,000 to this SEP. But every year, when she would go to make the contribution, she would contribute to the SEP, get the 60,000 in there, and the next day she would do a Roth conversion. Now I meet people all the time who say, Aaron, I make too much money, I can't do a Roth conversion, and that's just not true. The backdoor Roth has been a vehicle that the wealthy have been using for a long time. In fact, when Biden first got elected, Elizabeth Warren and the Democrats tried to close the loophole on the backdoor Roth and make it so it wasn't a thing anymore. Wait, Dimitri said the audio is bad, the mic is not good. Is that my audio? Because Mandy broke up. You can hear me okay, Becca?
I can
Yeah?
hear you perfect.
Okay.
Is it just me?
Yeah, Mandy's kind of lagging a little. You might want to turn your video off because you're on the road, right?
Okay.
Yeah, there you go. Mandy's, yeah. She looked like she was lagging a little. Hey, Dimitri, when you have little comments, put those in chat. Just put questions in Q&A. And then Becky, you can kind of dismiss those as they pop up so that we only have questions there you go. Good. Okay. That way I'd love to see only questions in Q&A and then any comments and feedback to throw in chat. That'd be perfect. So then my wife would do a backdoor Roth conversion. And that's a strategy the wealthy have been doing for years. So literally the $60,000 she put in there, she would pay taxes on it. It wouldn't be tax deferred. Now, then we would go and we would invest it in real estate deals, in crypto, make loans out of it, do flips out of it, all the things that we're going to talk about that you can do in a retirement account. And so fast forward 9 years later, her contributions have been 600,000. The value of her IRA is $3.2 million. And so 600,000 of the money was from contributions. 2.5-ish is growth. Give me a laughing face emoji if you have not made anywhere close to those kinds of returns over the last 9 years. Okay. And the best kind of example of that is this guy, Peter Thiel. And many of you may not know his name, but this is the guy that started PayPal and was one of the early investors in Facebook. And in 1999, Peter Thiel had documented that he had $2,000 in a self-directed IRA. And then by 20 years later, he claimed $5 billion. The most that he could contribute every year was how much, Mandy?
$6,000, sorry.
Yeah. So his max contribution over 20 years was for most of that time period was $5 grand.
Yeah, I was gonna say five, then 5,500, but yeah.
So his contributions, guys, was about 100,000, and he made 4.99 billion on growth. And it's because he was able to put IRA shares and use them to buy PayPal preferred stock. Okay. And so one of the things that a lot of people don't understand is they said, no, if my retirement money, I can't actively manage it. That's partially true. But it's confusing because, Mandy, how are the rich people passively, actively managing their money? How do they accomplish that?
Well, it is kind of an interesting topic because if you think about, you can manage your stock portfolio, you can actively buy and sell, Coca-Cola stocks, Microsoft stocks, whatever, mutual funds, whatever you're invested in. And the same concept is true of real estate. You can buy and sell real estate inside your IRA just in the same way. The difference is that they call it sweat equity. So you can't go over and put any sweat equity into the property. So you get a property manager to do it for you.
Yes. Yep. Becky, you get questions about that all the time, right?
Absolutely. Yes. And I think the main thing is, well, my Fidelity guy said I can't buy real estate. I can buy, a REIT or invest into a fund, but the rest is so risky. So yeah, absolutely.
Yeah, I love that Becca mentioned Fidelity. Let's kind of talk about the big groups here. Okay, so you got your who are our big retirement managers in the country, Mandy?
Excuse me, Fidelity, Vanguard, Schwab, and and
Merrill.
then Fidelity's the biggest.
So
Merrill Lynch, Edward Jones, yeah.
Give me a heart emoji if you don't have money with one of these three firms. Give me a heart emoji.
I'd love to see.
If you do not have a dollar with Fidelity, Vanguard, or Charles Schwab.
Oh, that's great to see.
7, 8, 9, 10.
So guys,
There's
we're
only
talking
10,
about
11.
less than 5%. Now
Yeah.
give me a laughing face emoji if you do have money with Fidelity, Vanguard, or Schwab, if you have an account with one of those big three.
Yeah.
Now, there's nothing wrong with these big firms, okay? You just have to understand that when we look back 10, 20, 30, 40 years with them, you're averaging basically 4 to 10% a year on your money. And the wealthiest investors, the Peter Thiels, they're not giving Fidelity $5 billion and saying, hey guys, put it in mutual funds for me. They're not going to Vanguard and saying, hey, can you put me in index funds with my $5 billion? They don't have a guy, they may have somebody at those firms at the top level who gives them access to syndications or something along those lines. But the big thing that I want you to understand is that these firms, and Fidelity in particular is interesting because it's privately held.
Yeah.
And they have literally a third of U.S. retirement accounts under management, don't they, Mandy?
Yeah. It's insane.
Yeah. And so what that means to you as an investor is you have to realize that for every $100,000 you have with one of these firms, you're probably paying $2,000 to $4,000 a year in fees. Now, let's say you take that free self-directed IRA that we're going to give you tonight, Mandy, and somebody sets it up for free. What's the annual fee on that $100,000?
It's $195.
Right. And so you could just take it away from Fidelity, away from Vanguard, away from Charles, put it in that self-directed account, and IRA Club only charges you a flat $200. That's one of the biggest differences that we see with our clients. Now, let's say you take that let's say you take the $1 million and you put it in a self-directed. Does the price go up if it's more money, Mandy?
No, we are flat fee.
Flat fee. And so one of the things you'll see, guys, is that I see my top 1% clients, they go to self-directed because of a flat fee structure. Now, there are some self-directed companies out there that charge a percentage, aren't there, Mandy?
Yeah.
But for the most part, we want you to, one of the reasons why we work with IRA Club is because they work in a flat fee environment. So you could take that $1 million and buy an apartment complex for $1 million. You'll pay an asset fee of how much, Mandy?
195.
You'll pay $200 a year for the apartment building, and then you'll pay the account fee of $200. But you're talking about $400 in fees on $1 million sitting in a self-directed IRA.
Yeah, and if it's Fidelity in mutual funds, you'd be looking at close to 30,000.
Yeah, yeah. And so with a lot of these groups, depending on how you invest, your fees on $1 million could be 30, 40, even $50,000, depending on what you're investing in. And so it's we're not talking bad about those companies. What we are saying is that, somebody mentioned that their employment plan is locked. And that's true. Most of you can't touch your money, you can't self-direct it while it's at your job. But when you change jobs, who has an IRA from a previous job? Sometimes that can be eligible to self-direct right now.
Yeah, like a 457, a 401k, a 403b that you've left, you're no longer working with it. That's your money. And typically that's the highest fees. So if nothing else, you get to get those rolled over to an IRA as soon as you can.
Yeah. Now, so my wife was investing her SEP, right, for years and turned it into 3 million plus. But when Secure Act 2.0 came out in December of 2022, they said I'm reading through and I'm like, oh wow, okay. Here they created a SEP Roth. So they combined it, they enshrined it into law. So now she no longer has to worry that if Democrats are in office and they vote down the backdoor Roth conversion, she won't be able to contribute in that way anymore. And so that was a perfect example of, and they also raised her contribution limits from 60 to, what is it, 72,000 now, Mandy?
70.
And then they delayed the required minimum distribution so that she doesn't have to start taking, well, she won't have to take money out of it ever. Why, Mandy?
Yeah, hers is a Roth. So there are no RMDs with the Roth. And the other interesting thing that happened with the Roth SEP is people say, well, I make too much money to put into a Roth. And with a Roth SEP, there is no annual income limit. So anyone, any income can go right into a SEP Roth IRA. And then if you are above that $150,000 mark or $200,000 mark filed jointly, we just do a backdoor. So I hate that kind of got out, that if I make too much money, you can't get into a Roth. No, we can get you into a Roth. Everybody should have a Roth. It's liquid gold. It's tax-free growth, tax-free coming out, no RMDs. And then if you do leave it to your kids, it's tax-free for them too.
Yeah. Give me a laughing face emoji if you do not have a Roth. If you don't have one yet. Okay. Guys, that's why I'm giving you 2 Roths tonight. Now, give me a laughing face emoji if your children do not have Roths. Okay, so this is why we're giving you 2 of them tonight. If you and your significant other do not have a Roth, we're going to give you a Roth tonight. We're also going to bundle that with a chance to have a one-on-one call with Mandy to get that set up and get questions answered about that. But my children have Roths. Becca's children have Roths. Mandy's children have Roths. That's a very common thing for wealthy people to do. And let me explain why. I have 2 sons, and one is finishing his senior year of college, and the other son he's a stay-at-home son. Okay,
wait, that's new. I like that. That's new. That's good.
So
I like it.
I have a stay-at-home son who he works, right? He's a busser at a restaurant. He likes video games, and he is not interested in going to college at this point. If I would have had 2 529s for my kids, then I'd be kind of stuck. But Secure Act 2.0 said, all right, for your son who's not in college, you could take the money from the 529 and use it to contribute to his Roth $7,000 a year. So you can take $7,000 a year and push it over to the Roth. Whereas previous to the Secure Act 2.0, if you had a 529 for your kids and they don't go to college, you're just screwed. Like there's nothing you can do. And
Mhm.
so that was huge. We have a lot of people or I had another client whose kid got a full ride scholarship. Mandy, did you have a 529 for your daughter?
I did.
So
I did.
Mandy,
Yeah.
for years, diligently put money in her 529 for her daughter. Her daughter just graduated high school. And where is she going next year, Mandy?
She is going to West Point. So she got in. Yeah. We're really excited and really proud.
So Mandy's daughter is into West Point, which puts her in the top 0.1% of accomplished high school seniors in America. That deserves a heart emoji or an applause emoji. And I've known this girl since she was in 8th grade, coached her in volleyball. She's just such a great kid. All state track. She was the head ballerina in the Nutcracker. I mean, just an amazing, accomplished, just well spoken, just a great kid. How long is her commitment at West Point, Mandy?
It will end up being 5 years. She'll do 5 years at West Point, and then she wants to major in finance. She told me she wants to update the military's finance. So it'll be interesting.
And so when you're in West Point, you don't pay for the school, you don't pay for the housing, you don't pay for the healthcare, you don't pay for the utilities. You literally, it's a full ride of full rides. And they even pay her, don't they, Mandy?
Yeah, she's going to make $600 a month cash.
Yeah.
It's crazy.
So now Mandy has a 529 that she has zero use for, which she's very glad that she has zero use for it. But now this year she can take $7,000 and put it in her daughter's Roth. Okay. And so guys, I can't emphasize enough how important it is for you to get a Roth. And here's what I want you to think about. A lot of people say to me, well, I make too much for a Roth. That's bullshit. Or they'll say, I can't, I don't want to, it's better to put money into traditional right now because I'm in a higher tax bracket, and when I retire, I'm going to be in a lower tax bracket. Guys, how ironic is it that your Fidelity person, that your Vanguard person, that your Schwab person says that to you? Because what they're really saying is put your money with Fidelity for 40 years, and I guarantee that you'll work middle class and retire poor. Like, I don't understand that. Whereas my strategy is be in the highest tax bracket your whole life because you have so much coming in for passive rents. Give me a heart emoji if you like that one better. Like if you're confronting always being in a high tax bracket because you always make 400,000 a year from your investments inside and outside of your IRA, then you want to, as soon as possible, get into a Roth. And so I want you to take the free Roth that we're going to give you tonight, set that up. If you already have one, set one up for your kids and start paying your kids. Now, somebody mentioned earlier, how do you do a Roth when my child doesn't work? All rich people put their kids on the payroll. And so you're going to put your child on the payroll of your business. Now, you could buy one Airbnb and your child could clean the Airbnb. Boom, they have income. Boom, they qualify for you to put $7,000 in there. When my children were very little, I put their image, their likeness on my Facebook business page, and they were paid as models. So I would only give them that $7,000 contribution, but a newborn baby can be a model. And
That's
so,
what ours were. They paid for their daycare since they've been born.
yep. Put them on your business card, put them on the logo of your, so it's very easy for your children. If you have the money, then you need to be paying your children and making the contributions into the account. Now, if you're retired and on Social Security, you just need a side gig. So you need, one Airbnb that you can manage. You need, you need just enough business that you can claim income so that you can make those contributions. That's how I want you to think about it. Okay. Let me jump here. I'm going to skip this video. I want to show you guys something else really cool on the IRA Club's website. Let's see. Becky, you can see my browser, right?
You can, yeah, you're good.
Okay, so you can see IRA Club's page, right?
Yes.
Okay, so guys, this is IRA Club's site. And I want to show you something really cool here. For years, we had clients that bought real estate inside of a Roth, inside of a self-directed IRA, and they would come to us and they'd say, hey, here's my problem. You send me these rents every month, and then I don't have enough to buy another property, so they're just sitting in the account. So IRA Club partnered with iFlip, which is
IRA Club,
there we
the
go.
trusted leader in self-directed retirement accounts, has partnered with iFlip to give you access to its cutting-edge investment platform. iFlip's smart folios are investment products that use AI to actively manage your investments, assess risk, and predict outcomes.
And let me just, I'm going to actually literally log in because I want to show you a couple of cool things that I have here. Let's see. So here is their trading platform. It's partnered with iFlip, which is like Robinhood or E-Trade. It's an online trading platform. And here's what's cool. So I have money in individual accounts, and then I have money in self-directed accounts. Who has a health savings account? Who's got an HSA? Give me a thumbs up emoji. Okay. So I love a health savings account because health savings account is triple tax-free. So it's tax-free contributions, tax-free growth, and tax-free distributions. You never pay the taxes on the money. Now, Mandy, about how much is an HSA for an individual versus a family?
Contribution wise,
Yeah.
I think a family is close to 8,000 and an individual is 3 to 4. I'd have to look those numbers up. I'm sorry.
Yeah, no, that's correct. And so, guys, what you can see here is I literally have $14,000 from the last couple of years of health savings account money that I've been able to roll from my IRA Club account right into the market. Okay, give me an O face emoji if you think that's cool. Now, here's where it gets really interesting. Okay, so I don't just have my health savings account money sitting in a zero interest bank account. I have it sitting in the market. And here's why I like iFlip. This is really gonna blow your mind. So iFlip has AI managed portfolios. They're called smart folios. So we've all heard how AI is like managing portfolios. Now, of course, you can go and you could buy an individual stock, right? So, or you could buy you could put money in an index fund. So you can protect the money if you want to. But you can also do these smart folios. So you can see the total account value I have is 23,000 in my self-directed HSA because I also have I've been putting 1,500 a month in and investing it very aggressively in my individual account. Let me show you what I've done here because I'm really interested in these who's intrigued with this idea of AI managed stock portfolios? So I've gone very aggressive. You can see on the right here, I have 2,000 in aggressive. I have 500 in aggressive. I have Shield Plus, which Shield Plus is a smart folio that tries to focus on inflation, stagflation, high tariffs. And then Vector Plus is all of the companies that are doing that should benefit from Trump being president. And so you can see in the first quarter, my portfolio lost 2.5%, but in the second quarter, I'm up 5.2% just in the second quarter. It's a little more volatile. I'm not that aggressive with my self-directed money. Over here, you can see my self-directed money. I have 23,589 from my health savings account. And you can see on the right, I've done balanced. And then I did oil, focusing on that. I did lose 6% in the first quarter, bounced back a little bit in the second quarter. But what's funny is you can see I get like emails every night as it trades. And so what's cool is now I can own apartment buildings, single family homes, make loans. I have profits that come in to my IRA Club trust account, and then it's linked already to this iFlip account. And so I can take the surplus cash and invest it in the market. Okay. Give me a O face emoji or a heart emoji if that's looking pretty cool, if that's something that you'd be interested in doing. Yeah. And so again, with the two self-directed Roth IRAs that we're setting you up with, we're also going to give you access to all of these tools, all of this that we have put together, and you'll be able to schedule some one-on-one time with Mandy to get that put together. Okay. And what I love about this HSA money is I haven't even done my contribution yet for this year. I actually need to put another 8 grand in there. Imagine a scenario where you have 200,000, 400,000, $1 million. I'm 51. My goal when I'm 75 is to have $1 million in health savings account money so that as my medical bills go up, it isn't a burden at all to my estate, and I can use that triple tax-free money. Okay. Do you see the little window of how rich people are doing things differently? Give me a thumbs up emoji if we blew your mind about Roth for you, Roth for your kid, or you're like, he's right about the HSA. I'd love to do something like that. Who's glad they showed up tonight? Give me some love.
That's awesome.
Yeah. Yeah. Now here's, we only want to go for an hour tonight, and I feel like we're just barely getting started. And I want to show you guys how you can join us for our Monday calls, for our live events, and mention that to you. If this combination, because if you think about it, my tax plan, my legal protection, my retirement planning, my passive real estate, my active real estate, guys, it's all one thing. You can't, and so every month we all meet live, either here in my offices in Idaho or in my offices in Indiana, with the goal of having a 360 focus on how we do things. Now, every Monday we have this community. We're going to give you free access to this tonight. We do hot seats, which is our Q&A that I mentioned earlier. We're going to give you access to this online community so you can join us absolutely free. And then you can see that if you can't join us live on Mondays, then you can just hop on here and get the recordings. We have an app for this page. This is called our Second Mountain Climber community, and it's for people who are focused on that kind of second mountain in life, legacy, paying it forward, making a difference. Give me a thumbs up emoji if you would love to join us on that free Q&A session that we do every Monday. Fantastic. This would be a great opportunity for you to ask us about specific deals, ask follow-up questions live on that. We also have our website, Alpine Capital Solutions, and we're going to give an invitation to each one of you to join us at our monthly 3-day live events. If you go to alpinecapitalsolutions.com, we're gonna get that for you. Becca is the one who can add you to the list for free to attend our monthly 3-day training. And so once a month, Friday, Saturday, Sunday, we do a live training. We don't charge you for that. Meals are included. Cocktail party, networking sessions are included. We've been doing this event since 2009. We love our Protect Wealth folks. The fact that you're here on a Tuesday night to learn about these strategies means you're the kind of person that we want to interface and work with. So I wanted to mention, in addition to the IRAs, we're going to give you online access to our community as well as live and in person. And of course, we Zoom and live stream the event every month, so we'll give you access to those as well. But we do that event every month. So in June 2021 and 22, we'll be in Indianapolis. July in Indianapolis. August we'll be back here in Idaho. September in Idaho. And so again, those of you who we just met tonight, we wanted to use tonight as kind of a starting point to get to know you. And then, lots of different ways that you can interface with us and that we can meet you. Now, I want to mention, let me jump back over here to these strategies, okay? Because I want to make sure that we get through all of this content tonight. We talked about paying your kids and your grandkids. So that's been covered. We talked about health savings account. Partnering. Mandy, we have a lot of clients at IRA Club, which, guys, I want to point out, Mandy, how many accounts do you guys have that have been opened with IRA Club over the last decade or so?
Over 15,000.
Yeah. So we're not talking about some small organization. 15,000 accounts. Assets under administration is what now?
We just hit 1.4 billion.
Yeah. So one thing that's interesting when you go self-directed versus Fidelity. Fidelity tells you assets under management because they're managing your money and charging you these fees. Self-directed trust companies like IRA Club, they're assets under administration because they're not investing your money. Mandy, the biggest number of employees you have or the biggest department for you guys is compliance, is it not?
Yep, Compliance and customer care.
And the compliance, and I like that you mentioned customer care, because I just had a client that came from one of your largest competitors. What's their name?
Equity.
Equity Trust.
Trust.
Yeah.
Yeah, we had a client who came from Equity Trust. They said, I'm moving over to IRA Club because Equity Trust is starting to charge me a percentage of my fees. And when I call them, I can never get a hold of anyone. Their customer care sucks. How is IRA Club different from that standpoint?
We are not a call center. So when you call the number that's all over our website, you'll actually get a human, so long as you call within business hours, and it's someone you can understand, which is nice. And then if for some reason we don't answer, we call you back. That's our two biggest priorities, is those flat fees and the customer service, because we know when you first start this process, like your first deal that you do, there's going to be a lot of questions. It's different than just throwing your money in Fidelity and having a manager manage it, right? You're buying a property and there are questions and there's titling and all of these different things. We want to make sure that you're well taken care of as you go through your first deal. After your deal's done, then there's kind of this rest period, because now your money's working for you. You either have a rental property and the rent's coming in each month, and there's not as many questions. And so we're able to help a lot of clients. And I kind of think of it as front loading. We want to make sure we're really helping you right up front. And then as your deal comes to a close, we'll help you again as the money comes back and you're looking for your next deal. You know what? We actually had a Google review yesterday that said the IRA Club is too good to be true, and only gave us 4 stars. And we're like, what? He goes, I just keep waiting for the other shoe to drop because they've been so helpful. And we're like, we
Oh my
just
God, that's
laughed.
so funny.
Isn't that funny?
That is hilarious.
So that is our priority, is to make sure that you get those questions answered and that we're there to help.
I'm gonna have Kendall drop into chat the link, because I know somebody said, hey, how do I get a hold of IRA Club? How do I get a hold of Becca? How do I get a hold of Mandy? We've created a landing page so you can get access to all of the free gifts that we have for you today. Kendall's going to throw that in chat. If you are interested in getting your 2 Roths, if you'd like to join us on our Monday calls, if you'd like to explore, we've put this together in partnership. Because you're part of the Protect Wealth family, all of this is free. There's no catch. There's no upsell. And so you can go to Alpine Capital Event. See, I think, Kendall, it's even easier. Isn't it just protectwealth.com/Aaron?
Yes, sir. Just put that in the chat for you. It should be right there.
Yep.
protectwealth.com/Aaron.
Yeah, Protect Wealth. So we just put this link in chat. Let me just show you what we have. We kind of have set it up to where if you are just starting out and you're just getting going, if you have less than 50,000 to invest in, you're pure active, I want you to click on the orange link on the right. That's just going to give you access to our community, access to the Q&A session, access to the free self-directed IRAs, access to the live stream of our monthly event. If you have over $100,000 in a retirement account, you're interested in passive investing, I want you to click on the link on the left. That way we can schedule, Becca can schedule a call with you. If you'd like to attend our live event in person, buy a plane ticket, book a hotel room, and attend our event in person, click on the link on the left, and just to kind of sort out who just needs the free online tools, who would like to potentially talk to us in person and join us at the event. That's how we've kind of set this up. And so on this, you can see all the gifts that we have for you today as a way to interface with us, the 2 self-directed IRAs, weekly access to the group. We have a private Facebook group we're going to get you in, access to our community. So a lot of cool things. So make sure that you check that link out. That's how you get access to everything today. And so, like we said, no strings attached. Now back to partnering. Becca, we have a lot of clients that a husband and wife have a 401k or an IRA that's self-directed, and they partner on deals together. How does that work?
Yeah, so myself included, I even partner with my children on deals as well. So there's a lot of buckets of money you can use with your IRA, whether it's cash and IRAs. But what we've done, obviously, we're very well versed with this process because we do it internally as well. But our PropertyWare system, which is basically like your bank account for your properties, you can see when your tenant paid rent, P&L, all the jazz. But then we set it in there in percentage of ownership, whether it's 30/70 or however it breaks down. automatically disperses out to your IRA. So whether rent's $1,000 or $1, we'll disperse it automatically that way. So it's very easy, very, very passive, very clean.
Yeah, so we have a lot of folks that do partnering. You can partner with yourself, guys. You can have a husband and wife that partner, whatever percentage. Maybe you only have $10,000 in an IRA from a previous job or a 401k on a job you left, and your significant other has 190,000. You could be 5% of the deal, and then every month you get 5% of the rents. And when you sell the profit, you get 5% of the profits. And so partnering is a great way. When my kids had less than 20,000 in their Roths, I would partner with them on rentals. I would partner with them on flips. I would partner with them into different deals that we do. So partnering is a great way to grow a small account. And a lot of people don't realize you can even partner with yourself, guys. Let's say you have $200,000 in a 401k or an IRA, and you want to buy a big commercial building, and you have $1 million in your LLC. You can partner into that deal with yourself. As long as you go into that transaction cleanly, you can have your wife's IRA, your LLC, all be partners on the same deal. And so partnering, sometimes I'll go to a foreclosure auction and find a really great deal, and I want some of the profits inside the retirement account, some outside. And that's something that we have a lot of experience with that we can help you with doing as well. Debbie said, I have an inheritance coming well over 100K. Can I talk with someone? Yeah, so Debbie, click on the link on the left, the green link, and schedule a call with either, we'll put you with either Becca or Megan. And yeah, we'd love to connect with you. See it? I think I have it right here. Hold on. There it is. Yeah, so just click on the link on the left, and that'll take you to one of our Calendlies, and you can schedule a one-on-one with someone from our team, and we can book you out to our live event. Love to have you join us at the event. That'd be fantastic. All right, solo 401ks and versus IRAs is something I see all the time. Guys, if you can qualify for a solo 401k or a SEP, that's a conversation that you want to have with Mandy. I would advise you to get one. Mandy, what are some of the considerations for somebody who's interested in qualifying for a solo 401k or a SEP? What has to be in place for them to qualify?
There's three big differences between the SEP and the solo. And so what I like to do is sit down with each person and kind of discuss them so that it's very personalized. The biggest difference is that the SEP IRA is just straight 25% of your income of your business that goes into it, up to 70,000. The solo 401k, you can actually get money in two ways. One, as the employee of your own business, which is up to 23,500 if you're under the age of 50. If you pay yourself 23,500, you can put that directly into the solo 401k, and then an additional 25%. So, if you compare the two of those, if I'm paying myself $100,000 in my business, with the SEP IRA, 25% of that is 25,000. 25% of that to the solo is also 25,000, but I also have the employee contribution of 23,500, and now I have $48,500 in my solo. So the first one is how we get money into that account and what one's going to be easier or best suited. The second one is if you need to take a personal loan, you can do that from a solo 401k. You cannot do that from a SEP IRA. And the third one is if you're ever going to invest using debt, meaning let's say for super simple numbers, $100,000 house, I've got $60,000 in an IRA, and I'm actually going to borrow from a bank a loan, a mortgage. Then the government's like, wait a minute here, you're using tax advantage dollars to borrow money. We're going to tax you on it. And it's called a UDFI tax, or an unrelated debt financing tax. And I always say is, and Aaron, you gave me this line, you got to run the numbers. Sometimes it's still worth it. You need to figure out if it's still going to be profitable to pay those UDFI taxes or not. But the solo 401k is exempt from those taxes. So if somebody says to me, I want to, I know I'm going to go into this deal and we're going to bring debt into it, I'll say, let's see what we can do to get you into a solo, because then you'll be voided from those taxes, excuse me.
Yeah. So each one of you, my K through 12 2 cents is, if you can qualify for a solo 401k or a SEP, you want to have those. A lot of people don't understand. You can have as many different retirement accounts as you want. You can't really put in more than about 70,000 a year, no matter how many you have. But you can have a Roth. You could have a solo 401k. You could have a SEP. And we've seen clients who've had traditional Roths. So the big thing is that you use your one-on-one with Mandy to figure out what's going to be the best for you. But from one investor to another, that's my 2 cents is if you qualify for a solo, get one, because there's going to be a lot of benefits related to that. If you want a meeting with Mandy, go to the link, click on the protectwealth.com/Aaron link, and click on if you have over $100,000, click on the link on the left. If you have under 50,000 total to invest, click on the link on the right, and you'll still get Mandy's Calendly on either link. And so how we've kind of set it up is, if you would like to attend our live event, Becca and Meg would love to talk to you in person and help you out. But if you just need these tools and the Roth, then we're kind of streamlined it for you. And yeah, UDFI is a big thing, guys. If you buy an apartment building with a mortgage in your Roth IRA, you're going to be paying like 35 to 40% taxes on the rents in your IRA when you get over $10,000. If you buy an apartment building inside your retirement account and you get a mortgage on it in a solo 401k, then you will not qualify for UBIT, and you won't pay taxes on that. And so there's a big benefit to that. Scott asked an interesting question about converting to a Roth from a traditional. Scott, we've seen some very cool things that people have done with conversions. I had one client who they have multiple properties with us. They only do a Roth conversion after a long-term tenant has left. And so when they've had a tenant that's been there 2, 3, 4, 5 years, it needs new carpet, it needs new paint, it's shabby, and it's going to need $5,000, $10,000, $15,000 in fix up. That's when they do a Roth conversion, because they order an appraisal, and appraisers hate properties that smell like cat urine, and they hate properties that are trashed. And so I've seen them get a diminished appraised amount, which is money they don't have to pay taxes on. That's, I think, significant. I also see people waiting to when they're in between jobs or after they retire before they start converting assets, because again, when you're not earning income, you're not paying as high of a tax rate on the conversion. The final thing that I've seen clients do is, if you have a traditional, you should buy property in the traditional now. And then I've seen clients who have taken outside money to pay the tax bill to IRS. Or one of my favorites was, I had a client who bought an apartment complex inside their traditional self-directed IRA. And they then, when they did the Roth conversion, they went to the IRS and did a payment plan. And the payment plan, ironically, was about the amount of cash flow the property was producing. And they said to me, Aaron, the rents are paying the tax bill. And I just kind of like the idea that my tenants are paying my Roth conversion tax bill, and it's not coming out of the money I put in there, because that money was used to buy the apartment complex. And so my payment plan to IRS is just the cash flow. Psychologically, I love that my tenants are paying that. So give me a heart emoji if that's a Roth conversion strategy that kind of is interesting and resonates. Cool. Yeah, Dunbar, if you book a call, it'll either be Becca or Megan from our team, either one. So hopefully some of those are helpful. Scott, if you'd like me to elaborate more on those, please join us Monday at our Q&A session. I'd be happy to spend 20, 30 minutes discussing that with you. So guys, again, we're hopeful that you see this relationship with us as a starting point to join us for our online live events, for our in-person live events, to work with IRA Club. We've put some amazing free tools together, because we've just found with Protect Wealth that it brings a very serious investor, someone who's interested in reducing their tax, someone who's interested in passive income, And so we don't want to try to hit you up for a couple $100 for a package when we know that you genuinely are interested in learning these things. Give me a heart emoji if the last hour has been valuable, if you picked up a gold nugget that that has made it worth it. The business relationship between Alpine Capital and the IRA Club is two separate companies. We have found that Anderson Business Advisors with their lawyers, Protect Wealth with this overview of asset protection, IRA Club with their 15,000 accounts, 1.4 billion in assets under administration, our real estate company, our clients can move between our companies and really get a lot of health. And so I don't get paid a penny of you setting up an account with IRA Club. We don't have that kind of relationship. Or if you work with, Protect Wealth, we don't get compensated for that relationship. But because we've all known and worked with each other so long, and we bring business to each other. A client that sets up an account with IRA Club very frequently is interested in our free education about investing in passive income properties. And so we're just really good friends and companies that have worked together. And we have Protect Wealth and we have IRA Club come to our live events and vice versa. Did I get that right, Mandy?
Yeah, absolutely. It just makes sense. It's like the biggest thing that I get when I'm meeting with people is what should I invest in? Where should I invest these dollars? So it's great to work with Alpine where they have the investments and the strategies, and then you can use your retirement dollars to follow those.
Yeah, somebody said, does IRA Club have any handouts to explain how the investing works? Yeah, so first of all, you're going to be able to do a one-on-one with Mandy and her team when you go to set those 2 free accounts up. But they have just a very, very robust IRAclub.com. They have a very robust information section. And so it kind of jumped through their website, and you can get just a ton of information, videos and handout type information about different questions. But I would start with setting up an appointment with Mandy and then kind of work backwards from there, because this is what she does all day long, is meet with investors. And Becca just dropped the link to schedule a call with us. So if you'd like to join us on our free Monday calls, if you'd like to come to one of our live events, then the starting point is to book that call with Becca for that. Let's see. I'll check out the website and call Mandy. Great. All right. Question.
The question I got in here is, when can you not contribute to an IRA any longer? And that's officially, there's not an age, but it's kind of a conversation that is going to be individual to you. If you're contributing to a traditional IRA, when you hit 73, you're required to start taking money out. So it's a lot of times for an individual situation, they're like, why would I keep adding money at 73 when I already have to take so much money out at 73? So a lot of times that's the conversation. With the Roth IRA, there is a 5-year limit, which means the moment you start the Roth IRA is when that timer starts. So if you open one today, you would be required to leave money into that Roth for 5 years. Now, let me be very clear. If you put $5,000 into a Roth IRA, you've already paid taxes to those dollars, and that $5,000 is yours. You can always take it out. But the growth on that account, let's say the $5,000 turns to $7,000. Now you've got $2,000 of growth. That growth needs to stay in there for 5 years. So if we opened it in 2025, you wouldn't want to pull it out until 2030. Otherwise, you will pay taxes and penalties. So a lot of times the conversation of when should I stop contributing to a Roth or a traditional is based on your age. And, if you're 95 and you want to contribute to a Roth and you think you're going to live to 100, it might make sense. If you're contributing to a Roth because you want to leave it for your kids, it might make sense. But a lot of times it's very individual and what you're trying to do with the money and when you want to use those dollars as to when you can't contribute any longer. But there isn't an age specifically of when you cannot add to an IRA.
Yeah. So hopefully, guys, this has been a good starting point, both kind of as an overview and how you can get more information about this topic. On Monday, I'm going to be spending 2 hours breaking down what I think the 5 hottest active strategies for real estate investing and the 5 hottest passive strategies. We've been doing some really cool things with boarding house rentals. We work with a company called PadSplit. We've been working, we've been doing Chinese storage units for $5,000 that we've been shipping over. We've done a ton with RV parks, manufactured housing communities. I have 4 manufactured home dealerships where we're buying homes for $100,000, put them on permanent foundations and selling them for $300,000. And so if you are interested in kind of more of a 2-hour deep dive on just real estate, Monday at the Protect Wealth 3-day, I'm going to be breaking that down. So I'd love to have you join us there as well. And Kendall, what's the best way to get registered for that if they aren't already?
Yeah, I'll drop that into the chat right now too. Just really honestly, guys, you can go to protectwealth.com and that'll get you squared away, guys. Thank you so much, Aaron.
Yeah, so guys, we appreciate all the questions. Looks like the team cleared over 40 questions, actually 55 questions. Warren said, if I transfer an existing Roth to IRA club, does the 5-year calendar start over, Mandy?
No. So it's the very first Roth you ever opened. So if you opened for your kids when they were 5, it doesn't matter. They can move that Roth from, Fidelity over to the IRA club, and that calendar 5 years does not start over.
Yeah, great question. Somebody said how to get in touch with Becca. Becca put her Calendly in chat. Kendall put the upcoming summit Monday, Tuesday, Wednesday in chat. Love to have you. If you haven't been on one of those for a while, guys, yeah, you definitely want to reconnect because even the same speakers have a lot of different things they're covering. And I know that our 5 hottest active strategies are not what they were 3 years ago, 5 years ago, 10 years ago. And our 5 hottest passive strategies are not what they were. We're in the process of putting together a portfolio of about $5 million in property across 5 states, across 5 different asset classes that allow you as an investor to put $50,000 and own part of a $5 million portfolio that's making 8% from the rents. And so if that's something that you're interested in, join us so you can get information on how to get access to those. But really appreciate the chance to meet some of you for the first time tonight. Hopefully you feel like you got a drink of water from the fire hose. As a former high school teacher, our goal is always to first teach and second return insane value. And so hopefully you're like, dude, all these free gifts, this is too good to be true. Good. Join us on Monday for our Q&A. Join us live stream for our monthly 3-day summit. Join us next Monday for Protect Wealth Summit, where we're going to break down active and passive. Get on and get those free Roths, get them funded, and start taking advantage of all these tools we've put together.
Yep. Apply with this education. Apply with your education. Don't just watch these webinars.
Yep.
Education is power. Aaron, do you remember it was 7 years ago we were down in Orlando and you were teaching at our event and you put a little 8-year-old on a bar stool up in front of everyone and said, okay, Maggie, what's in your Roth IRA? She's a 2nd grader. Do you remember her response? She said, well, I've got a couple residential rentals and I've got a commercial property and we're doing hard money loans and I don't know what that is, but we're making good money. And her mom whispered, yeah, you've got a business startup. No, Mom, I have 2 business startups. This is a 2nd grader, 8 years old. Can you, sometimes acquiring wealth is about education. It's about knowing the tools that are available. And Aaron, Mandy, Becca, so good to have you on. Thank you for your education. Any closing comments before we leave for tonight?
I love that somebody said, sounds like a nice symbiotic relationship. I love to come and talk about how great the self-directed IRA product retirement planning is, because so many of my clients come to invest with us in real estate with that purpose. How do I take this $500,000 and turn it into a pension of rental income and investments in the market? And so it's interesting that sometimes, Toby Mathis is a great friend of mine from Anderson Business Advisors. He's an attorney, but every Tuesday he does Tax Tuesday breakdown where he helps his clients, talk about the tax. And so it's interesting how while you may be an expert at one thing, you develop this indirect expertise in other fields that sometimes you can break down in a way that's uniquely helpful for them. And so I love the companies that Protect Wealth brings on. And perfect example, Mike and Stacy Koval, who will be on next week. I've had clients that use their trading strategies to trade options very successfully, and then they come and take those profits and buy properties from us in LLCs that are put together by Anderson. And so, it all overlaps and it's all integrated together. And so hopefully you understand that in this community, we all we play nice in the sandbox, and we use each other's products and work together. I think that's something that's very unique.
Well, it is, and besides that, we're all good friends, but we recognize I'm not Toby Mathis, and I'm not Clint Coons, and I'm not Aaron Adams, but you know what? We all bring something to the table, and we have a mutual respect, I think. So, thank you for recognizing it, and it is symbiotic. There we go. There's the word.
There you go, symbiotic.
Manny, thanks for being here. Becca, it's so good to see you again, always.
You too, Tom.
Aaron, thank you for being here. Next week, Summit, if you're not going to be there, my gosh, you're missing something. I've gone through the PowerPoints, and all the speakers have been submitting their stuff, and I'm looking at it and going, it's a powerful, powerful 3 days. So I hope you can join us. Aaron, thanks for being here. Sign up. Okay, we'll
See you Monday.
Okay, good night.